Okay, so let's say you want to enter in on a trade here, right? Now, if, for example, you say you want to risk maybe 25 pips. So you want to risk 25 pips on this trade, 25 pips. Now, let's say 25 pips when you measure from here to this point is your 25 pips, right? Now, putting your SL here and entering on a trade here is actually not too good because why? The market made a low here at this level, and the market made another low here at this level. So the best, most of the times, is to set your stop loss at the last low, just a little bit below the last low. Now, I know it might want to contradict what we said yesterday, but in most cases, if market has touched this low, just as it did here, and it did here, so if the market is coming down at this point, you are, even if the market will go low, at least it won't go below this point. It won't go below that point. So sometimes it's best you set your stop, let's say this level. So if you're entering in on a trade from here, let's say you are buying from here. So the best place to set your stop will be just a little bit below this, which will be like 30 pips. Then you take your high, right? So most times target the last or previous low, except in rare cases when market makes a new low like this. In fact, it's on these kinds of trade that you enter in with a very, this is what we call the sniper entry. You can enter in here and your stop loss will just be 10 pips so that you can maximize on your lot size. So because you know that the market has already given you, what's it called? The pattern, the candlestick formation here. So in this kind of entry here, you don't have to make your stop loss so wide. You make it so short and use high, very high lot size to gain more of this. So what we see here is bullish engulfing. So this candlestick pattern here is the bullish engulfing pattern. Bullish engulfing. So first of all, there is a downtrend from here because bullish engulfing always follows either a downtrend or an uptrend. So this guy right here, this green candle right here is our engulfing candle. So this green candle swallows up. Why is it showing behind? Style now. Okay. Anyways, so this guy here is the bullish engulfing candle. So the fact that it swallowed up the previous candle, right? Swallowed up this previous candle, this red candle instead, swallowed up this red candle. And this candle here, this is a, now, the candlestick pattern, this is, who knows which candle, what's the name of this candle? Hmm. We're not studying, we're not studying. This is an inverted hammer. This is an inverted hammer. So you find the candlestick, an inverted hammer candle stick. Okay, so it's most times like this. What's wrong with this thing? Oh, let me show us. This is an inverted hammer. So you can see most times when market is reversing, you must learn this candlestick. This is hammer, or you can call, yeah, this is more like a shooting star candle. This is a shooting star candle, rather. It's a shooting star candle. Anyway, so in this, what I'm trying to say is there are times market gives you a confirmation of through this candlestick formation, you know that this is a reversal. Well, I think we might have to teach that some other time. So this is a reversal here. This is a reversal. If you measure, or sorry, if you understand the candlesticks, you will know that the market is about to reverse. Two reasons why. This particular candle is the engulfing candle. This particular candle here again is the inverted hammer. So these two candlestick formation. Now you might look at this, it doesn't make sense. But a trader who understands candlestick formation knows that this is a reversal. Just this 1, 2, 3, and even this bullish momentum candle here shows you that you are in for more buys. The market has shifted, or maybe we can go to lower time frames. We can see. So on a lower time frame, it's even giving you a W pattern. So all I'm saying is this, right? If you know through candlestick formation chart pattern that the market will reverse from this point, you need to take advantage of your entry. So you can enter from here. So might enter from this candle. I need to just retrace a little, but if you understand the formation of the pattern, you can enter as sharp as that and set your stop just below this line, 10 pips max below this line, and take advantage of this move. That's what I'm saying. But there are times, for example, let me show us another scenario. Okay, like the scenario I was given from here. So there are other times that you want to take a trade from here. But because the market has come to this zone 1, 2, you can't risk it from here to think that the market will not come to this point. So it's safe you set your stop loss below this zone. So even in case the market comes here, it might tap into this box, then begin to buy. So you are safe. So in fact, So in fact, it's not all the time that you have to use percentage. Yes, even some, I know you've calculated your stuff. So what will you now do? For example, I said you have to plan your trade. So let's say you see the market on this spot here and you want to enter in on a buy. So you want to enter in on a buy from this spot. Now, what you are supposed to do in this case is set your this tool, your long position tool, set it at the point of entry, then measure your pip stop loss, the pips of your stop loss. So when you've measured it here, it reads, let's say, approximately 30 pips. So it's 30 pips that you will use to measure here. So you have a 1,000 account and you want to risk 10%. So what you're going to do is 30 pips. Then you calculate what the market will give you. So this is what you're going to use, right? So let's say in this other aspect, from this other trade here, from this other trade, you got entry from here and you want to use just 10 pip stop, 10 pip stop. So it's around here. Yeah, let's say around here. So what you will do is come here over here, use your 10 pip, and you will see that you have to use one standard lot size. Wow, that's a lot to trade on this. Use one standard lot. Imagine if you catch one standard lot on this. Let me see. 135 is 135 pips, one standard lot. That means you'll be making 1,350 or thereabouts. So that is why we say use percentage to measure your risks. So as far as the percentage is fixed, right? No matter the stop loss, whether it's 5, you will still risk the same amount, but you can catch more trade. So imagine if you are using 5 pips, you can use 2 standard lot size to trade. If you use 2 standard lot size, that means you'll be making times 2 of this, which will be about 2,600 or thereabout. So if you're following me, drop one on the chat, please. Let me know if you're following me. Drop one on the chat if you're following me. Okay. So always plan your trade. Always plan your trade before you step into the market. Just know that anytime you jump into this market without a plan, you are gambling. Yes, anytime you jump into the market without a plan, you are gambling. So planning your trade will help you manage your risks. Now, in risk management, there is also what we call trade management. So there is trade management. If you recall, I said risk management has to do with any plan or action you take. before and during the trade. Risk management. Actions you take before and during the trade. Right? Risk management covers this. So before the trade, you sit down to calculate your risks, right? Sit down to calculate your risks. Now, during the trade is actually what we call trade management under this risk management. So any action you take during trade is called trade management. For example, if like on this trade now, I'm on this trade currently, right? And I'm making about 1,365 on this particular trade. And I'm using 5 standard lot size. Now, I entered exactly on this point. As this trade has moved to my favor so far, what I need to do is to trail the stop loss or uh, break even, whichever one. So under this trade management, you have break even rule, um, stop loss trails, stop loss trail. Ah, trail. Oh. No, this trial. I can't remember that spelling. To trail, like to track something. Anyways, you guys know you're educated. So to trail the stop loss means you follow your trade. For example, as I'm making profit now, I move my stop loss to this point, to this last low that the market made. And I'll show you is a low. When you go to a lower time frame, a more lower time frame, you will see that there is actually a low on that point. The market bounced off there. 1, 2. So here is a safe zone for you to put your stop loss. That means you are running on this trade risk-free. Now, you can actually, I learned this and it can help if you always use it, right? If you learn to, I wish I can share my screen now for you guys to see what I'm saying. Okay, let me see if I can join with my phone and share my screen. Mm. In progress. Okay, can you? Ouch. How do I do this? Okay, can you hear me now?
Yes.
Yes, sir. But I think there's an echo from your end.
Yeah. Just a minute. Okay. So, I my voice. Okay, I think it's okay. All right, so I was saying, now, if you look at this trade now, right, once it moves, for example, a little um, direction. Okay, let me put it in a more professional way. When you are on a trade and it makes a swing high and a low, for example, this is what I mean. This trade made a swing high like this and it corrected. So your entry is this level, right? So on this trade now, it is safe for you to move your stop loss to either below this level, just anywhere below this level, and just let the trade to run risk free. So this is part of trade management. So when you are trading, of course, it's good to set stop loss, take profit, and all of that. But if you're trading, you want to take advantage of the movement of the market so that, because sometimes you can see a move like this and the market just drops very drastically to the downside and just even goes below your entry. So it is best you take advantage of. You see, the first thing is that you didn't bring anything into the market, right? So even if it takes you out on this level and it's just like $50 you made, is this something? It's better than going home with a loss. So as you are trading, you are trailing your stop loss or you are setting break even on your trade. It's also part of the management of your trade and also risk management. So right now on this trade now, I think it was here when I set this. So as I made this swing low now, I can move my SL to this point and just still watch the trade to see what it will do. Okay. Do we have any question? Any question? I think it's understandable. I believe it's understandable. So so you need to have a break-even rule as you are making money. A break-even rule. You set a rule for yourself. Maybe it's personal. Most of these things are personal based on your dealings with the market and the pair you are trading. So maybe you just said that, okay, if trade moves maybe 30 pips or 50 pips, I set my break even, right? And also your maybe you can choose to say, okay, I think these two, trailing stop loss, break even, I don't know if they are the same. But let's say you enter in on this trade from here, you set your stop loss here initially. So if the trade has made a little profit, you adjust your stop loss so that even if in case the trade goes anyway, the risk is reduced. You adjust your stop loss, and as the trade keeps going to your favor, you are adjusting your stop loss. You're adjusting your stop loss as the trade keeps going. So, like I said also, you don't enter in on a trade. Sorry. You don't enter in on a trade first. Well, most times that we do that, but I think it's not a good habit. You enter in on a trade from here. You say, let me just enter buy first. Then you now start looking, oh, where can I set my stop loss? That's why you plan your trade. You take time to plan your trade. So the planning of the trade involves you analyzing the market. Okay, waiting at an entry zone. Then you're also waiting to see your confluences that, okay, if the market shows me 1, 2, 3, 4, or 1, 2, 3, then I can buy or I can sell. So with that, in fact, and again, let me say this, most times as traders, there is a temptation that you've done your planning well. And once you enter in on a trade, you begin to make another decision contrary to what you've already planned for. It's also wrong. It's a bad habit. You'll see that you will miss out on good trades. So let's say you already made a plan that at the break of this ascending triangle, I'll enter in for a buy. So you entered in for a buy here. And let's say you just saw this red candle that's forming there. You saw this red candle and you started changing your mind that, maybe this thing is just a fake out. See, any decision you make while you enter in on a trade, it might sometimes be a very wrong decision. So you trust your analysis and um, trust the analysis you made and trust the entries and your confluences. That is why you have a stop loss. So one of the things you need to train yourself to do is once you have entered in on a trade, you either allow the trade to go to your TP or your SL. Unless, of course, sometimes the trade might be slow, misbehaving, you can go out. But sometimes you need to learn to have that discipline because it can be very difficult to master that patience. Sometimes it's when you just leave a trade that you just see a red candle going against you, or maybe a green candle going to the upside and you're selling. You take out the position you entered, and after all, you see that that was just like the candle coming down to fill up the space. So don't take decisions while you've already entered on a trade. Make your decisions before you enter in on a trade. Because some of these things will actually affect your risk management, right? It can affect your risk management. Okay, so now Mr. Desney already spoke about this yesterday, but let me just say that these risk to reward your risk to reward is important, very, very important, because some traders, maybe their stop loss is 45 pips and the trade they are catching is 50 pips. It's not worth it. You don't have to always trade, right? You don't have to always trade. If the trade you're entering in on cannot give you at least 1:2 risk to reward, it does not worth it. Yes, it's not worth it. Allow that trade to pass and wait for a better setup. So at least if you are risking 10, you should make 20, least 20. Some people, 1:2 is even too small. It's at least 1:3. Now, this is the wisdom behind 1:3 risk to reward. So let's say that your percentage risk is 10, right? 10% of $1,000 account. So it's a percentage risk you set, which is $100, right? So let's say in a week, this is Monday, you trade on Monday, right? And that day you took a loss, which is minus 100. Minus 100. Tuesday, took another loss, right? Another minus 100. Wednesday, you made profit, right? And your profit is 1:3. That means you're observing the ratio 1:3, right? Which is plus $300. So, sorry, let me move up a bit. Oh, this thing is writing on the screen. Anyway, so let's say on a Thursday, right? On a Thursday, let's say you took another loss of minus 100. But on a Friday, you took a win, which is plus 300. Do you see that? Like I said, Mr. Desney already taught this, but we're still staying on that topic. We're just buttressing it. So on a Friday, you took a win. So you only took 2 trades that were positive for that week. Normally, because you took a loss 3 times, you might say, oh, this guy is not a profitable trader. But it's not true. Look at the risk, the profit and loss P&L. So the total loss for the week, because his risk management is in percentage and is fixed, he only lost $300. But with these 2 trades, he made $600, right? Made $600. So at the end of the week, he still made $300 if the half of it is covering for the loss he made for that week. So at the end of the day, he's still a profitable trader. This is why risk to reward is important. Don't joke with it. Yeah, don't joke with it. So if you keep your risk percentage fixed and your risk to reward, because sometimes 3 is even, let's say, the average. Maybe you can get even 4 for a trade. 1:4, risk to reward. So at the end of the day, you see that if you keep your losses consistent and your wins, you are scaling your wins, you will be profitable. So it's not necessarily the amount of trades that you have lost for that week. if you take two good trades, it can cover up all your losses and still make you as profitable. Very profitable, actually. So do we understand risk to reward? So make sure you have a fixed percentage of risks on your trading account. Don't go above it. Like I said, if you want to take more trades, split your risk percentage. Split your risk percentage. So if it's $100, right, you can choose to maybe break it down, break the percentage into two, maybe 5% per trade, 5% per trade, right, which will be $50. So let's say you want to take two trades, one London session, two New York session. So you can still split the 10% risk into two. And guess what? The risk is still fixed at 100. It won't change. That's the beautiful thing about this. So it's just that the stop loss, rather your lot size will be divided into two. One for this trade, one for another trade. Maybe you might see another opportunity in New York session. So you split your risk percentage to accommodate more trade. You can split it into three, is your choice. Make it 33.3% per trade. That's three trades. So it's very flexible. Very, very flexible. Okay, so do we have any question? Do we have any question? Position sizing calculator. So we already know this. You can go to, actually there are many platforms that have this calculator. Like this one, for example, it doesn't have for, I don't think it has for Bitcoin and gold. But there are other platforms that have for Bitcoin and gold. So just go on Google and check position size calculator. It will bring you many websites where you can use for free. Give you many websites you can use for free to calculate your risk percentage and the stop loss that you should use. So this is the position size calculator, right? Okay, so we have almost exhausted this curriculum. Introduction to advanced trading bonus. Welcome to advanced trading. What is liquidity? The power of three: accumulation, manipulation, and distribution. Imbalance. 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 Should we talk about this? I think we should leave this for some other time. But so far, do we have any question? Any question? Okay, so did anybody analyze any charts today? Did anybody analyze any charts today? So nobody analyzed charts today. Okay, Simeon, you analyze the chart, so share with us. Let's see what.
Exactly. I'm on my phone present.
Why are you on your
It
phone?
it's I'm not in the room at the moment, so that's why I'm on my phone. It's the same GBP USD, sir.
So what did you analyze now? Please, when we are joining, join with your laptop because I can ask you to share your screen at any time.
Oh, okay, sir.
So what did you analyze? You can share your phone screen too. I think we can see.
Hey, okay. Let me see if my phone will be reaching.
You go carry phone join class.
Well, I know vex. Only the host can share in this meeting.
Pastor will approve you. Oh,
It's like you go carry cement. So that's
yeah. He
maybe
passed cement sef. Oh, this week has been exhausting. I work till 7 and still go to the gym. Today, I actually even finished work early. I still went.
That's nice.
And I know you say what they come. I dey prepare.
Me I dey buy weapon, no be to give. Before you come near, I don't kill you.
Hey.
I dey buy nuclear weapon. No, it's like na part of property now. Buy nuclear weapon. Just keep am for your house.
I literally don't know what is going on with the world, but may God help us, because
Amen. No.
economically everything, certain countries are becoming something we don't understand.
Yeah.
You just want to fight. And amidst all that, Donald Trump is acting like a demigod.
Mm. Very soon they'll start rebelling against this guy. So serious. Okay, Mr. Leon, share your screen now.
So I think everybody understand this risk management thing now. Abi, no be waiting the happen like this now.
So,
Please, sir.
until you
Sorry.
start to lose
One
money
minute.
now.
I think Pastor mentioned money management. Was it on Monday or last week? So I want to know if we'll still talk about it or not.
Which one is money management?
After trading now.
After trading.
It's on the curriculum. How to manage money, compounding, and the rest.
Oh, eh, to be honest, I don't advise people to go into compounding and trading. No.
When you see money withdraw, go chop.
To be honest, I don't advise people to go into compounding and trading. Your progress will be very, very slow. If you see all these traders want to explain compounding and teach you compounding, it will look like you can use $50, you can turn $50 to $10,000 within 3 months. Now lie you.
Mhm.
Yeah, I am being honest with you. Compounding, they will say, oh, it's very easy when they want to use calculator and timetable
Yeah.
and do it for you. How if you trade, you make 50% today, the next day you make another 50%, you add it in a week, like that, you are multiplying. Is a lie. Oh. You have to be consistent with one pattern of risk management. Because if you start with $100, let's say you make 50% of $100, that's $50 today. Compounding requires you that tomorrow we should risk your 150 to be able to do what? Make 50% or 100%, depending on the target you are starting your compounding with. So imagine you are risking 150, you probably lost potential 50% or 80% of that 150. You are starting from ground zero. That's what compounding is. So imagine you've probably moved your $100 to $400. You lose 50% of it. You are close to ground zero. And you take another trade, you lose another 50%. You are already gone. That money don't go first.
Yeah.
So I don't really advise people to go into compounding, in as much as when you want to learn it, it seems very, very promising. If compounding was so possible, yeah, people can easily go into trading with a capital of $100, and in 1 month they have $2,000 from that $100 already. No, because the market involves risk. So you have to set a pattern for yourself. You have to set a structure of profit. Like Pastor explained today, trailing your stop loss is one of the most efficient risk management strategy, because most times markets can go your way and move against you. And remember, markets always have two side to it. So it can turn that your side is the minor movement for that day. Imagine you analyze markets and you see a bullish divergence, meaning you see markets looking bullish in the morning, you took a buy. That can be the minor movement for that day. It can be that the major movement for that day, market is going to sell very, very deep. So the minor movement is that bullish movement. That is bully divergence. They are just giving you a partial bullish sign for you to take a buy. But when the main institutional traders come, what they may potentially do is opposite what every retailer has been doing from probably throughout London section. For Forex, that usually happen. Even in crypto, it happens. You can see markets can be buying from 7 a.m. when you wake up till New York session afternoon or late afternoon. And the next thing, everything switch. Your technical analysis for that day cancel. Everything change. Before you know, market start to sell. So if you don't trade your SL, you are already in profits. You did not book partial profit, or you did not do anything, you did not trade your SL. So you can enter trade with $100, you can be seeing $50 profits, and you are happy that day, you smile. You probably don't even go Amazon, they look for things you want order. And the next thing, you say, may you go chop lunch, come back. You come, yeah, you open this thing. How this forest sound, they do, boom, boom. Your money don't go.
That thing they
You'll be
paid,
surprised.
Jesus, when you
If,
see profit, you don't take.
exactly. So the thing is, you have to understand that your analysis can be correct, but markets have two sides to it. Remember, there are different sections to it. There are different forms of institutional traders to this thing. London section deal with London banks. New York section deal with New York bank. Those are two different forms of institutional traders. There are two different people that can be having different form of economical mentality that day. The fundamental analysis that they can be different for those two people. London section, their institutional traders will trade based on the United Kingdom, the central bank. New York section will trade based on America Central Bank, whatever it is, those kind of things. And you analyze market that morning, you are seeing bullish signs. Market is buying, you took profit, you took trade. The market is going your way. You did not book partial profit. You did not move your SL to break even to stay on a safer side. When markets now move against you, it is more painful. It is even painful when you are on profit and you then leave market at break even, probably zero profit for that day. It is painful, but it is more comforting and comfortable for a trader's psychology than when you are on profit and you live with stop loss, you live with loss. Let me tell you what that thing can do to you. It can push you to revenge trading, can push you to over trading, it can push you to a lot of things. When market moves you out on break even, it it comforts your trading psychology. You don't get too angry with the market. You can easily control your emotions and rest for that day. Then let's assume you adjust your SL to an area of, let's even say, minimal profit for that day. At least you can rest to say, okay, I've gotten something from the market that day. Even if throughout that day, all the trade you took is that partial profit where you adjust your stop loss to that the market closed you on, you've made something that day. But now, when you don't adjust your SL, all you did was you're just waiting. Imagine you are seeing plus $50 and the next thing you turn, your market is minus $50 instead. You would be pushed to revenge. Trust me, you would think you are disciplined till you enter this trading thing without lack of strategic moves or without proper strategic move. You would think you are disciplined. No, if you don't use any form of, I'm not even talking about technical analysis. If you are not strategic with trading, with dealing with the market and all that, the market finds easy way to manipulate you. One of the easy ways pushing you to revenge trade, pushing you to overtrade, and the next thing you see, your eye go call clear that day. You can't lose $100, you don't lose your entire capital, and it go call dawn on you say at the start of your trading that day, you were already making $50 to $80. But at the close of the market, you've lost your capital. And you would think what is wrong with you is your technical analysis. You are not good with this thing. No. If you analyze analyze 3 trades in one day and one gave you profit, one puts you on profit for a certain period of time, you are good with technical analysis. I am telling you the truth. What you lack is strategy to stay ahead of the markets. I want you to carry that mentality. Forget anything that anybody will come and sell to you online. If you can analyze 3 to 4 markets in a day and 1 or 2 it puts you on profit, even I'm not talking about hitting your take profits, no, because not all the time markets will even get close to your take profits. 1 or 2 puts you on profits for hours. When I mean profit, I'm not just saying few pips away from your entry, at least a reasonable area and all those things. Trust me, you are good with technical analysis. What you lack, if you are dealing with such after a certain period of time and you are always leaving the market with losses, you always end up losing your capital after a certain period of time. What you lack is strategy. That's where area you then need to work on. Strategy and psychology, trading psychology. Those are the area you need to work on. Because probably the side you are coming from is greed. Some people, they feel like they can milk the market. I so much sorry for you if you stick to that mentality. Not all the time markets will get to your take profit. You should know when to close. You should know when to book partial profit. You should know when to trade your SL. Like me, if I am taking a trade that I know that I don't want to overtrade SL, I just wait. When I move my SL to break even and markets push far away from my entry, I will close with that profit and rest. And if markets keep moving to my direction, I most likely I'll just remove that chart from my trading view, go and focus on other markets, so I don't jump in out of greed thinking I can milk the markets. No. Another thing you can do again is, if you don't want to miss out on the move, if you don't want to miss out on the move, especially if it is a swing move, what you do is you trade your SL constantly, especially if it's a trend. Let your stop loss be below most higher lows if it's an uptrend and all those things. That way, you are using a strategic move. If institutional traders decide to step in and manipulate the market, you will still live with something. You understand now? Then another approach you can use again is learn to book partial profits. For example, those that will be focusing on Forex, if you place 4 position, market has moved to a certain area of profits, You place 4 position. Out of that 4 position, you are seeing they are all in $30 profits. If you close one on $30, adjust the rest to break even. You have done well for that day first. Markets move ahead of you again. Maybe move to like a stage, they are all in $45. You close another one, you adjust the rest to their SL. You have made it for that day. Even if the rest of the move, all you want to do is the remaining 2 trades, you want to adjust your stop loss and not close anyone. As long as you are doing that, you have already won that trade. You see, all you just need is strategy. Not all the time. This thing is not come, you place trade and cross your finger. When not be, buy financial markets. That's just it. So it's not all about technical analysis, understanding as you have understand technical analysis, how can you stay ahead in the market? That's where risk management comes in. So when we are talking about risk management is one of the main, in as much as you think this thing is talk, you have to be jotting things down, because this is what trading is all about. This is what trading is all about. The risk management, so, is what trading is all about. Let me give you another form of compounding most of all these big traders do. If they put a capital of, let's say, 20K in a broker on one MT5 account, they will set it that throughout this month, this account, I am not withdrawing from it. Then they will start trading with it. When they are trading with it, they are not waiting for market to hit TPO. They will be closing most of their trade. All they just want to do is make advancements with that money. That's because that money is not money that they will be pressured to withdraw or whatever it is. This is another form of risk management. If you know you don't want to be someone that always withdraw profit, like me now, they withdraw profit at the chop. I value my belly. Because if I use hunger look the market, if gold fit they take green candle go up, make I go short term. So I am telling you, for me, I like withdrawing profit. Sometimes if there is a certain period of time I want to challenge my TA, I will create another account, then put a specific capital there. Okay, this I want to compound this account while I know how to withdraw. So there are different ways you can approach this market. You just have to be strategic. It's not just jumping in and jumping out. That's just all. So in as much as most of us will be thinking that the serious thing we need to learn, we've learned it, is a lie. You see this risk management is more serious than your technical analysis, because trust me, you can know what market wants to do. And if you lack a strategic approach, you can still even lose money to the market. That's how funny it is. You can be so good in analyzing market and you will still be losing money. So if trading is all about just knowing how to analyze markets, if it's about just knowing how to analyze markets, most of us now, for probably they follow Elon Musk chop dinner. That is how it is. So I am being honest with you, is what you need is a strategic approach. And this end side of this curriculum, the things we've been talking about, starting from that risk management, trading psychology, even I think next week we'll find time, I would also bring you guys on a lot of things about trading psychology. These are the main things. Remember, when we started learning this, and I told you, trading is just 20% technical analysis and fundamental analysis, 20% technical and fundamental analysis. The rest depends on your risk management, depends on your capital, depends on your trading psychology. That's just it. So this is the main thing. Every other thing you have been learning is just understanding the market. Now, this will help you understand yourself. It will help you create a strategy. It will help you learn what you need to do. And this will also give you certain level of financial knowledge. And one of them, again, is what I have talked about before. Person fee give you $500, make you no use and go trade. No be because say you don't analyze, you don't trade demo account, you move demo account from $200 to $10,000. Now lie, the moment you put that 500 inside the account, you go no difference.
Go shock you.
Somebody no need preach give you. Something will happen to you. You
Ah,
understand? That is one financial knowledge you have to understand. If you have money for rent and school fees, please pay your rent and school fees. Don't come and think you are a trader. You have been growing demo account. You have moved demo account from $100 to $20,000. I am sorry. Please pay your house. Do what you need to do. Invest in yourself first. I'm telling you the truth. Because the moment you put that money into a trading account, one of the reasons why you will lose the money is you will trade under pressure. The reason why is, first of all, you trade under pressure. The reason why is you want to make money immediately because the money you deposited already had a use. So now you are in a hurry. Another reason why you will lose that money, is because you've created too much need for the money. And third reason why you will lose that money is a fear of losing. The fear of losing will make you lose money in trading. If you are having fear to lose money, you will lose money. Because that money is school fees. You are scared not to lose that school fees. That's the reason why you will now lose it. That's how trading psychology works. So these are some certain financial knowledge that risk management and trading psychology will teach you. And this, if you apply to every aspect of your life, you would be safe always. So I think that's just all. Maybe next week I would find time and really go through some of my old books and just put some certain key points about trading psychology. So I think that's all for today, class.
all right. So if you have a question, please let's ask. If not, I think we can call it a day. I just wanted us to just pay a little bit more on that risk management, so we don't take it for granted.
And I will also say, please, we should all learn to be flexible, to sometimes join online trading. Most times, if I want to analyze markets, even if it's in the morning or 9 to afternoon, I will post in the group. Anybody that can join, you join. If you want to take the trade, I know me, I'm more based in crypto, but yes, you can also on your MT5, you can still do one or two on Bitcoin, Ethereum, and and all that. Then lastly is I would tell you guys something here. If you take time away from everything you've learned, you start from scratch. You will not understand it. I promise you this. If you take time away from everything you learn, the only thing you need right now is we've learned a lot of things, way more than what people pay $500 for. I am being honest with you. Everything you've been learning in this group, in as much as you might be underestimating it, this is what way more than see in my journey to this place in trading. There are sometimes I have paid. I think, Pastor, when I was teaching one time, I told you about how I paid $500 to somebody to teach me specific thing. The person just sent me list of bookmaker I read. That was it. That was what I paid $500 for. I studied it myself. I asked the person questions. If the person could not answer me, that's how it is out there. So you've learned a lot of things, but the only thing that will make you go deeper and gain a certain level of mastery in this thing is your ability to practice what you've learned. So most times when we drop screenshots in the group, when we talk about this thing, we are not trying to bug you, we are not trying to ask you questions, or we are not trying to laugh you. Practice this thing, talk. See, there's this thing I usually used to say concerning relationship, but in trading, this thing works. Attention breeds affection. The time you give to the market is like an investment. Years later is what you will reap. The time you give to the market, the time you spend with the market, years later is what you will reap. You are sowing, you are investing. The reason I am saying this is most of you will learn this thing and just toss it outside, because you probably think you have the recording, you have this thing. Trust me, you leave this thing for 1 month, even if you go back to those recording, you will understand zero to nothing. Is as easy as it is. If you notice me, whenever I say some realistic thing about trading, I don't use maybe. Sometimes when I say negative things about trading, I don't use maybe, because it is not maybe, it is certain. That is how it is in this space. So please, when they drop something, when they drop a screenshot of gold, you self open your laptop, go and look at the gold yourself, create an understanding for yourself. You don't just come to the group, pastor drop buyers on GBP USD, and you just read it for that day. You've not helped yourself. Open this thing, look at it for yourself, try to understand, ask questions. Sir, me looking at my charts, I'm thinking this thing is bio, but how do you think, why do you think this thing will sell? Which chart pattern, which structure that is confirming sell for you? These things is what you would use to stay ahead in this market. Because even till today gone, I still go back and learn. I still learn from people. We learn from each other. You see, Mr. Emmanuel there, when he found out back then in Cyprus that, I was trading, the moment he took my number, we started learning from each other. Yeah, we started, what do you think about this thing? That is how it is. I have friends today that they will drop group. These are people that have been in the space for 4 years. They will still drop chats inside groups. Say, Destiny, what is your bias on this thing? Let me gain. That's just how it is. So please, attention in this space is what breeds affection, because I promise you, if you neglect this market and just think you've learned something, this one will be school. You know, good. If it dey your head self, make you know understand them later. You can know terminologies, you can know things, you can know what market structure is, but in a month later, you might be so confused in this market, disoriented, you don't know what you are doing. This is just how it is. So all I am saying is, please spend time with this market, practice. When sometimes during the weekend, I tell people that this is the best time to understand this market. I am not joking. The weekend is the best time. When I'm talking about crypto, sometimes I am not joking. If Forex is see, to me, in as much as I have come to a conclusion that I'm not saying Forex is easier, but if you want to actually gain a certain level of mastery in sentimental analysis, and how you can, correlate them to technical analysis and all that, is crypto that will teach you, not Forex. Forex, somehow, for some weird reason, it aligns with technical analysis. If I tell you to open Bitcoin chart now and draw a proper trend line for me, I bet you would not, because the market is almost not aligning with technical analysis. But how will you understand these things if you don't practice, if you don't spend time to know these things? How will you come to a stage where you can differentiate between different set of financial markets, that when it comes to crypto, you know how to approach crypto market, that you will not just come to crypto with the way you've been trading Euro USD? These things is when you spend time with the market. So I might be chatting a lot, saying a lot right now, but I promise you, please, everything you've learned way more than what people pay hundreds of dollars for. Spend time with these things. That's it. You can be very, very busy. Set apart at least 1 hour every day. Even if it's not 1 hour, even if it's that moment that one or two person drop chats on the group, you open your laptop, you analyze it for yourself. That alone can be adding to your knowledge and experience every day. So that's just it.
Okay. Do we have any question? There is no question. So I think we'll meet in the group then. See in the group. So let's call it a day. I think we gain value from what we have discussed so far. I think we might have to, maybe if we take the last topic, we'll just have to tell everyone to, for a trial, open an FTMO free trial account and just pass the test there. The test the knowledge you gain, just put it on practice and see how it is on the real or on a demo account. So maybe by next week or next 2 weeks. No, next week, yeah. By next week, we should open the free FTMO trial account. So just start trading using the things that you've learned and see how it is on a simulated account. All right, so if we don't have a question, we'll call it a day. Thank you for your time. Have a wonderful evening. Good night, everyone.
Nice, sir. Thank you, sir.
Bye.
You.
Yeah.